Hello, welcome to the European Open briefing for Friday, October the 27th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. The euro is under heavy pressure following yesterday's European Central Bank policy meeting, where, as expected, they cut the size of their asset purchases. But the ECB refused to label its decision as tapering and also kept open the possibility of further extension of the QE beyond the current set limit. So this weighed heavily on the euro. It's fallen to 3-month low against the dollar. The greenback, on the other hand, has been boosted following the budget resolution vote in the House of Representatives yesterday, which suggests that the Congress is one step closer to approving Trump's tax reforms. We've got USDJPY data later in the day. That's going to be the main focus of the day. We also had Japanese inflation numbers, which missed expectations, increasing the pressure on the Bank of Japan ahead of next week's policy meeting. The Australian dollar is also not doing so well this morning after Australia's Deputy Prime Minister was forced to resign, and this means the ruling party has now lost its majority in Parliament, and oil prices are once again testing new highs. This comes after the comments from Saudi Arabia's Crown Prince yesterday, where he gave his strongest backing yet for an extension of the OPEC output deal. Let's first start with the euro. We can see that if we were to take this as a head and shoulders, we can see the euro has now dropped below its neckline, which is around 1.1660. The euro hit a 3-month low, 1.1614 against the dollar. It also slipped below the 0.89 level against the pound and below 133 level against the yen. The ECB yesterday announced that they're cutting their asset purchases from 60 billion a month to 30 billion starting in January. The current program ends in December. They renewed it for a further 9 months, but they did say that it could be extended beyond September 2018 if necessary. And also looking at the updated forward guidance, it does suggest that the European Central Bank is unlikely to start raising rates anytime in 2018. Mario Draghi in his press conference said that this is not tapering, it's just a downsize. So all of this has weighed on the euro, as it means that while the Fed will continue raising rates, the policy divergence will likely increase further between the Fed and the ECB, at least well into 2018. But apart from the European Central Bank, we've had other developments as well, which normally would have been positive for the euro, but given the ECB decision, that's more than offsetting any potential positives from the fact that the Catalan leader has now backed away from declaring independence. He also chose against calling a snap election following disagreements within his own party, according to reports. The Spanish Senate is due to meet later today to approve Article 155. So this means that the Spanish government will likely withdraw some autonomy in the Catalonian region and potentially call fresh elections in the region sometime early next year. Let's look at what's happening to the dollar now. We can see the dollar index has now risen to a 3-month high, hitting 94.91 earlier today. Apart from a weaker dollar, we've had other factors. A weaker euro, I should say. We've had other factors boosting the dollar index, one of which has been that speculation about who's going to replace Janet Yellen once her term expires in February next year. There have been some reports in recent days that Janet Yellen is now no longer in consideration, so this leaves John Taylor, who's supposed to be a hawk given his Taylor rule policy, which suggests that current rates in the US should be much higher than their current level, and also current Fed Governor Jerome Powell. It should be noted that we've got both the Fed chair, position of Fed chair, and vice chair being up for reappointment. So it's quite likely that both Taylor and Powell could be reappointed in those two positions. But the possibility that Taylor could become the Fed chair has been boosting Treasury yields on the prospect of higher, faster rate increases by the Fed. And yesterday we also had the vote in the House of Representatives, which passed the budget resolution, taking the tax reforms one step closer to being approved. The tax legislation will be introduced to Congress next week. Although the vote was a very narrow one, up to 20 Republicans voted against the bill, as the new budget proposes eliminating some tax breaks to make way for spending increases from the tax cuts. But overall, this has been very positive for the dollar, and we can see dollar yen reached a 3.5 months high of 114.30 earlier today. We also had Japanese inflation numbers. We didn't see much of a reaction to those figures in dollar yen. Japanese core inflation, which excludes price of fresh foods, was unchanged at 0.7% year on year. This was below forecasts of 0.8%, and once again, this highlights the struggle of the Bank of Japan in lifting inflation to its 2% target. The Bank of Japan is holding a monetary policy meeting on October 30-31, that's Monday and Tuesday, where they're not expected to do anything. But given the fact that following the Prime Minister Shinzo Abe's big election win recently, it does further reinforce expectations that the Bank of Japan will likely maintain easy monetary policy for some time yet, and this has been weighing on the yen, and we can see that since mid-October, dollar yen is trending upwards. The weaker yen is also boosting Japanese stock prices apart from exporters. The Nikkei has reached its highest level since 1996, but of course the yen doesn't behave like other currencies. The yen always rises the yen always declines when there is a risk on. That even applies to the Japanese economy, so it could potentially signal further weakness for the yen and further strength for dollar yen. Looking at the Australian dollar now, we've had some political developments there. We've already seen the Kiwi fall to 5 months lows after Labour came into power in New Zealand, and we're also seeing some political uncertainty hitting the Australian dollar as well. The Aussie hit a 3.5 months low of 0.7623 against the greenback yesterday, after the Australian Deputy Prime Minister Barnaby Joyce was forced to resign following allegations that he's holding dual citizenship, which he hadn't declared beforehand. Australian constitution bars citizens from foreign countries from serving in parliament, so Joyce was forced to resign. He will be standing again after giving up his New Zealand citizenship. There's a by-election in December, but in the meantime, the centre-right government led by the Prime Minister Malcolm Turnbull has lost its majority in Parliament, which was just won beforehand, and this is weighing on the Aussie. We can see that the Aussie is well off its October highs of around 0.79, so quite a big decline over the months for the Australian dollar. And a quick look at oil prices. Yesterday, Saudi Arabia's Crown Prince said that he supports extending the current round output deal beyond March 2018. OPEC is due to meet on November the 30th, where a possible decision then could be made to extend the output deal, although it is still fairly early. But in the meantime, we've seen Brent crude hit a 2-year high of $59.55 a barrel. WTI crude not doing as well. We did see a surprise build in US crude stocks this week, so that could potentially be weighing on it, as well as, of course, the impact from the hurricanes. But WTI crude still managed to make a 1-month high of 52.86. And finally, looking at today's economic calendar, we can see Japanese data there, as well as we just had German import prices, which rose more than expected. But the main focus will be the preliminary GDP estimates for the US economy for the third quarter. That's expected to come in at 2.5% annualized rate. That's it from me. Thank you very much for watching, and have a great day.